So the objective of the channel, help you make your banking relationships profitable, teaching you how to partner with banks and use those relationships to increase your net worth. Purpose of this video is going to be talking about how you can maximize your earnings on your cash deposits at JPMorgan Chase without having to leave their ecosystem. Chase Bank's savings accounts suck when it comes to rates. They're terrible. And we'll be taking a deeper look at that in this short video. But I want to give you an alternative to where you can park that money and not have to leave the entire ecosystem of JPMorgan Chase, so you can still get the benefits of relationship banking, which can be beneficial for you in the grander scheme of that relationship. So why is it so important to make sure you're getting the best rates on your cash? Because inflation is terrible if you are not paying attention to the returns on your cash deposits. JPMorgan Chase savings accounts might as well be a checking account without the functionality of making purchases. They pay next to nothing. And inflation is going to be eroding at the purchasing power of that money that you think you're saving for rainy day emergency, opportunity fund, investing, whatever. It's not going to move or hold the same weight in the near future if you're not paying attention to what it's earning while it's sitting. So why does it underperform? It's convenience versus yield. It's liquid, it's easily accessible, it's parked to the side, FDIC insured, and you're getting that convenience and peace of mind at the expense of the potential yield. Big banks don't typically compete when it comes to savings rates. Their business model is different. They are at such scale and they're so large that they're offering other products and features that will attract your deposits or your money beyond their basic savings accounts. So they offer those products as a standard part of the banking ecosystem. They'll offer savings accounts, but in more cases than not, they're not going to offer you competitive rates. Even as you tier up to their higher savings accounts, they still don't pay much. And that's because they want to try to attract your capital to other divisions of the bank, other products that it's going to be better rates for you, but it's also going to be more profitable and a deeper relationship for them. That's the general premise of why they don't compete to pay better rates compared to smaller community banks, credit unions, different business models, totally different clientele bases being served most of the time, different business models based on the scale and size of the institution, and also the fact that they're private entities versus, for instance, credit unions that are not-for-profit and member-focused. So the cash can drag basically because you don't know where to park that money. They're advertising a Chase savings account and any bank savings account. You're thinking savings account automatically means a decent yield, and that's not the case. So what's the alternative? It's going to be actually JPMorgan's brokered CDs. Many of you may be brand new to this product, but I'm going to give you a relatively respectable deep dive on this product without taking too much time. JPMorgan is the investment wing of JPMorgan Chase. Chase is the banking deposit side. JPMorgan is the investment wealth management side. They're the same entity, two different sides, regulated differently, providing different products and services, etc. JPMorgan is still all under the umbrella, and your relationship is still going to be all counted as the same, whether your money's with JPMorgan or the Chase side, the deposit side of that institution. So it's important for you to understand you can move between these two divisions and still be looked at under one roof as one relationship, as one client. Very important, because that allows you to navigate the different products and benefits as you need without feeling like or having any concern that your relationship dynamic is going to shift or drop or dwindle. Okay. So JPMorgan, within their brokerage wealth management firm, offers what's called brokered CDs. And this is basically going to be where you can purchase CDs from other financial institutions on their marketplace. And that's very, very important. That allows you the flexibility to shop for higher paying CDs at other financial institutions without having to leave the primary financial institution you're banking at. That is a beautiful thing, because now I'm getting better rates and returns on my money, possibly even beating out or at least matching inflation, but hopefully beating it out. I'm working with another bank that we're going to talk about in a second, some of the benefits of that still, but I'm doing it all in one platform. So the brokered side of this is JPMorgan is the middleman, basically. What they're doing is providing the platform or the marketplace where this other bank is able to provide their products to you as the end user. So the brokered portion of the brokered CD just basically means you're gaining that CD instead of directly with that bank. You're getting it brokered through JPMorgan that's in the middle, brokering the deal between you and that financial institution. Hopefully that makes sense. Comment down below. The big thing about this not only is the returns, but the fact that the brokered CDs are still FDIC insured, which means that you are covered up to $250,000 inside of that CD, given that you don't have, the dynamics of your banking relationship with that institution in other accounts. Okay, so basically, if you're on JPMorgan's platform, buy a brokered CD through Wells Fargo. If you have other cash or money with Wells Fargo, then you're going to have to assess your FDIC coverage based on that total relationship on a per account basis. I'm not going to get into weeds on that because your situation could be unique. But generally speaking, we're going to assume that you have nothing else with this other bank. You're on JPMorgan's platform and you decide to grab a broker CD through Wells Fargo. You're FDIC insured, potentially up to $250,000. Beautiful thing, because you're getting a great rate. Your money's still secure in a deposit account. The rates are usually higher than basic savings and bank CDs because these institutions are now on these platforms, these different marketplaces, competing more directly for your deposits. When you're already banking with an institution and you just move over to their CDs, they're kind of not competing with anybody else. But when you're on a broader marketplace and there's dozens of other banks and you're trying to pick the one that has the best rates and terms, there's a direct competitive dynamic that forces them to pay better rates. So it creates the perfect environment. My money's still FDIC insured. I'm staying on one platform where my primary banking relationship is, getting the benefits of relationship banking, and I'm getting a better rate because this marketplace setup forces these institutions to pay higher rates to try to earn my deposits. Beautiful thing. Why this works inside Chase JPMorgan's ecosystem, I already kind of broke this down. Same institution, different size of the house. So relationship banking benefits still apply. If you look into the fine print, you will learn that the tier levels of relationship banking with JPMorgan Chase are developed by deposit and investment relationship balances. Basically meaning that deposits on the Chase side, investments on the JPMorgan side, all looked at as the same. So liquidity planning with maturities. If you're purchasing these JPMorgan broker CDs, you want the ability to manage liquidity. So that basically means that I need to know when I'm able to get my money out in case I need it or if I desire it for a said opportunity. You can ladder these CDs if you have a decent amount of cash and you want to get the best rates possible, but you still want to, create liquidity or give yourself some access to cash over time. So what laddering basically means is you can go on JPMorgan's platform or work with their advisor and purchase a 3-month CD, a 6-month CD, and a 9-month CD. And let's just say you got $15,000 and do $5,000 a piece. You got competitive rates still on the 3-month, the 6, and the 9, but you're going to have money available to you every 3 months versus you doing all of it in a 9-month and having to wait the entire 9 months to get access to any of your cash without a penalty. So to put this into comparison, I wanted to give you guys a really quick glance at JPMorgan's or Chase's savings rates really quickly. And it's kind of a side-by-side comparison. But as you can see, JPMorgan or Chase side, the Chase savings account is the standard savings account. You're looking at 0.01 to 0.02% at the time of this recording. Broker CDs are going to vary drastically because there's dozens of financial institutions on the platform offering various CDs at various terms. So you have to look at a rate sheet. So we're not going to look at that. But generally speaking, very common at the time of this recording to see 3.5, even 4% to give you an idea. The rate on the Chase savings account is a variable rate. You do have immediate access to the cash, which is a convenience, a benefit. The interest does compound, even though it's absolutely nothing. The minimum deposit is low. You can put next to nothing in the account, but the minimum threshold to avoid a service fee is $300 at the time of this recording. you are FDIC insured in that account. Now, if you go over to the JPMorgan broker CD side, much higher rates. They're competitive. They can be variable, but they're fixed. If you pick the right broker CD, they're fixed during that duration of time. You just have to select that when you're purchasing the CD. So sold on a secondary market at no penalty. Just to give you clarity, there's a primary market and a secondary market whenever you're trading any type of stocks, bonds, brokered CDs. Whenever you're on a brokerage, set up on a brokerage platform, on the investment side of things, there's primary market and secondary market. In plain English, primary market means I'm buying directly from said issuer. So if I'm buying a broker CD from Wells Fargo, primary market means I'm buying it from Wells Fargo. Secondary market means I'm working with another individual who has that product already and selling it to me. So if I'm buying that broker CD from Wells Fargo in the secondary market, somebody else, Joe, is selling their broker CD from Wells Fargo to you. So the primary means directly from the institution. Secondary means from an individual that's holding that particular product and selling it to you on a secondary market. You can do this at no penalty, but with the broker CDs, the rate at that point can change when you sell it. You could be risking losing out money on that way. I'll let you get into the details if you decide to look into it further. So it's paid inside of the brokerage account. Minimum deposit is usually $1,000 or more for this, so keep that in mind. It's not as low of a barrier to entry as a Chase Savings. Still FDIC insured up to $250. Very important. Very, very important. So as you can see, this is where the kind of moves that you can make to take a platform like JPMorgan Chase, which all of us who bank there know that their savings accounts suck. And you still want the relationship, you still want to get all the benefits and perks of relationship banking with JPMorgan Chase, which are really great, by the way. And but you want to get a decent return on your money. And normally you end up splitting off significant levels of your deposits off to other institutions altogether. This is a mistake. Once you drop below certain balance thresholds, JPMorgan downgrades your relationship, could start charging you service fees, pays you less on rates. Your ability to borrow with them from an underwriting perspective drops. It just drops the entire chain of benefits that can come with relationship banking with them. So this alternative with brokered CDs through JPMorgan's platform, which can be done on their self-directed, which can also be done with an advisor. Depends on the amount of money you're planning to work with and what you're looking to accomplish as far as how you want to manage it. The self-directing platform, you can do a minimum of $1,000 there. If you're working with an advisor, you're probably going to have to be dealing with $100,000 in investable assets to do so. But in either case, it keeps you on that one ecosystem, getting the benefits of relationship banking. Comment down below. Let me know if you're banking with Chase Bank, if you're dealing with, sitting cash in their deposit accounts and dealing with their terrible returns. Let me know if you're familiar with the broker CD strategy or if it's new to you, and if it's piqued your curiosity and you want to learn more and you want to tap in and possibly move your money over there and keep it within that ecosystem to continue to get your benefits. Comment down below and let me know. Let me know if you know of any other strategies to get decent returns on your savings with JPMorgan Chase. Let me know in the comment section down below. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. Like, comment, share, subscribe, support the channel so the channel can continue to support you. Get in the description section down below. Time with me on Instagram and TikTok. And other than that, I want each and every one of you to stay focused. Stay in motion. I'll see y'all soon.